Welcome back to the Small Business Playbook, the path forward. We thank you for joining us this afternoon. And we also thank you for taking part in the concurrent sessions that you just finished up. And we hope you got a lot out of them. You know, we talked earlier about the possibility of a second tranche of government support for small business. Maybe it would be in the form of another sort of iteration of the PPP loans. Maybe it could take another form altogether. Who knows? But Congress is not making any progress toward any of that really right now. So, and it will not be the only way that small businesses will be able to find funding. So now we're going to talk a little bit about the hunt for money. Show me the money, we call this segment. And we're joined this afternoon by Margaret Anadu. She is the head of the Urban Investment Group at Goldman Sachs. And Orvin Kimbrough is the chairman and CEO of Midwest BankCentre in St. Louis. Orvin and Margaret, welcome. Margaret, I want to begin by asking you about an interesting advertisement that the 10,000 small business voices put in this morning's Washington Post, calling for Congress to come back to Washington and to get to work on help for small business. This is a group organized by your employer, Goldman Sachs. What did the ad say, and what does the group really want?
Yeah, so the ad was incredibly inspiring to over 1,000 businesses from across the country. We're telling Congress very simply, all we're trying to do is do our job. We're trying to pay our employees. We're trying to serve our customers. We're trying to keep our businesses going. And to do that, we need more assistance. The first round of PPP was helpful. It was a stopgap, but in its design, it really helped for 8 weeks. And we're sitting here in week 22. And so the message was very simple. If you want us, the small businesses who are the engine of this economy, we employ half the private workforce. If you want us to do our job, Congress, you got to do your job. And I hope that that letter in the Washington Post was a wake-up call, because we're hearing it loud and clear. These businesses need and deserve more assistance.
We've spoken a lot over the past few weeks to the entrepreneur Tillman Fertitta, who runs Landry's, which is known for its casino, Golden Nugget, and other things. And one of the points he has made has been that he wishes that politicians, whether on the state level, the local level, the federal level, could really were made to feel some of the pain that he and his business and his individual workers have felt over these past few months. At any rate, Margaret, let's stick by talking about some of the things that we led off with here, and that is people need to find sources of capital. We know where they often go. They go to their credit cards and take out cash advances. They go to friends and family, and they do that, and that can be fraught with all kinds of emotional and other risks and threats. What do you think the best ways right now for small businesses to go for funding is?
Sure. No, it's the question. It's an excellent question, and I don't say this lightly at all, but I think small businesses in this moment need to be incredibly expansive in how they think about capital. We've all talked about PPP. We've all talked about, the additional assistance that needs to come from the federal government, but there are local stakeholders as well. And these businesses need to continue to make their voices heard, with the mayors, with the small business services in their communities, with corporates, because we're seeing capital come from different places. I'll give just one example. The state of Pennsylvania, I think, again, after really hearing from the small businesses in their state, they announced $100 million in grants, right? So as we know, there's probably more need than that. It's capital that will likely go quickly, but continuing to be expansive in the search for capital, I think it does pay off. It just requires incredible grit and resilience. We've seen grant programs launched by corporates around the country. We've seen, here in New York City, the Small Business Services had a grant program as well. And so I think what small businesses need to do, and they have been doing this, and they have been resilient in the search for capital, but is to be incredibly expansive about where that capital can come from. It's not just the federal government.
I'm very interested in what you're seeing and hearing, and in what I and others observe is going on in the urban centers of the United States. Because if you take a stroll through Manhattan now, and I'm sure you've done it recently, Margaret, it's a very different place. It is less populated. Lots of businesses are boarded up. Others are closed. Yes. And I wonder, and those are in the neighborhoods of Midtown Manhattan and Lower Manhattan. and not out in the outer boroughs where the distress in minority communities is severe. I wonder what you're seeing there, and how can some of those minority-owned businesses that may not have banking relationships that others do, how can they find the capital to help them get through this and survive?
Yes. So you hit it on the head, Tyler. We are seeing higher levels of distress in minority communities. That's, here in New York City where I'm sitting, but also around the country. And I think it's a moment not just for those businesses, but I think for society at large to recognize that there's a whole set of businesses who at least today are not well served by the mainstream financial system. And so what we've had success with, so Goldman Sachs, we've committed $750 million of capital to be deployed very intentionally and specifically through mission-driven lenders whose goal and expertise and mission it is to reach those businesses that are minority-owned in lower-income communities. And so, if there are small businesses out there who've not had the most success with the large banks, or quite frankly don't have large banks in their community, they should try to go to community development financial institutions. They're known as CDFIs. There are over 1,000 of them around the country. And these are institutions that have a mission to serve those underserved businesses, smaller businesses, those businesses that are struggling disproportionately in this moment.
How do you reach those small businesses in those particular communities, whether it's a barber shop, a nail salon, a beauty salon, a bodega, an auto body shop? How do you reach them so that they know that there are resources out there? You mentioned one just a moment ago, because I can well imagine that a lot of those business people, they think, well, the bank name, choose the bank name, they're not interested in me. How can they find out about the programs that are out there? How do you reach them? So I think you're touching on a real challenge, and it's about credibility gaps, it's about information gaps, and so what we've tried with some success is really it's about partnerships. So even for the CDFIs, they work with other partners who are the trusted anchors in communities. That is the local church, that's the local small business center. We had a great partnership with the National Urban League. They have small business centers around the country. So it wasn't enough to just say, let's deploy capital through these mission-driven lenders. It's like, how do you get the word out? I was talking to one of our great CDFI partners down in the South, Bill Bynum, who runs Hope. He's like, we got to get on the radio. I'm reaching businesses through the radio. So it's not just, hey, here's the capital, it's at this bank, go get it. It's how do you get to the intermediaries, the relationships, the partners in those communities who can really get the word out. But it's not simple, it's not one step, and we have to continue to push and really do the work to reach those businesses. Yeah. I can imagine it's quite a challenge to let the business owners know what's available out there that may be a phone call or an email away. I'm curious, and I may be off in a never land here, but we've heard a lot over the recent several years as a result of the tax bill of 2017 or 18, I guess it was 18 that it really took effect, of these enterprise zones that give tax preferences to people who put money invest in the inner city areas or in distressed areas, whether inner city or rural. Is there a way that entrepreneurs can get in touch with those investors who are part of those enterprise zone programs?
Yeah, so I think you're referring to the Opportunity Zone program that was part of this last
Opportunity
tax bill.
Zones. I'm sorry. Yes, I am.
Yeah, so we have seen a few funds around the country focus on small businesses and how to get capital to small businesses utilizing some of the tax incentives from Opportunity Zones. But I want to be really frank there. The vast majority of that Opportunity Zone capital is really going to real estate projects. It hasn't necessarily been a tool that lends itself to kind of the mom and pop Main Street businesses that we're really focused on today, the restaurants, the bakeries, the barber shops. And so I'm not, unless there's some, significant innovation in that tax incentive, it's not really a tool that at least today works well for small businesses.
Well, that's interesting. It came into my mind there. there, Margaret, and I thought, is there a venue to tap into that? But I thought, as you just described, that it was largely for real estate redevelopment and development in those areas that are designated as distressed. We're having a little trouble with Orvin Kimbrough's signal. St. Louis is out there in the middle of the country. We can deal with you, Margaret, here in Manhattan, but we're having a little trouble with St. Louis today. We hope to have Orvin join us in a moment. Let me ask you, Margaret,
the one thing while we're just touching on opportunity zones that I will say, and this is a little bit indirect, and I think it's not necessarily getting at exactly what you're speaking of, but in the real estate project that at least we've been able to capitalize with opportunity zones, it does give you more flexibility to drive, more impact in those projects. So I would say the vast majority of the opportunity zone deals that we've done to date, we have been able to provide retail space at much lower cost than we might have otherwise. So, for example, we just closed on a pretty significant transaction in an opportunity zone right here in New York City. And one of the benefits of the opportunity zone structure and having, that incentive there is providing very, very discounted space, actually I think at no cost, to a series of not-for-profits who will get to operate right on 125th Street in the heart of Manhattan. So while opportunity zones, I think as you mentioned, it might not get that capital directly to small businesses, certainly within project finance can be used as a tool where the ultimate beneficiary is a small business. And we've seen that time and time again.
As you work with and around people in urban areas, I wonder what you're thinking and what people are telling you about how quickly, if ever, the urban centers of many American cities will come back after this, after periods of shutdown, after periods when workers have decamped from downtown Manhattan or Boston or D.C. They have worked at home. And obviously, this is going to affect, among other people, small business people who depended on those workers for lunch, for shoe shines, for dry cleaning, for personal care, and so on and so forth. And what kind of attrition are you thinking we may have in small businesses in those urban areas, whether it's right in Manhattan or it's in Brooklyn or the Bronx or Queens or whatever city you want to pick, LA, San Francisco?
Yeah, so I think it's a great question. We are certainly all concerned and focused on it. My team at Goldman Sachs, we invest the vast majority of our capital in urban centers around the country, and I think there's still so much that's unknown, right? We started to see an uptick in activity around the country, and then of course we saw that start to slide back as we had additional closures and we saw the virus increase. On the other side, we're hearing optimistic talk about actually having a vaccine by the end of the year. So it's still, there's so much unknown about what the virus is going to look like in centers around the country, where we're going to see those cases increase or decrease. And I think beyond just the data, it's also about just human comfort. When are people going to be willing to be out and about, right? I think there was some great research that came out of Goldman. This was probably a month or two ago, that demonstrated a lot of the activity in terms of going out and about. It's not just related to forced closures, but it's also about personal comfort and decisions. And so I think there's still a lot to learn. I'm certainly hopeful that we get back to higher levels of activity very soon. You're very right. So many of the Main Street and mom and pop businesses that are the lifeblood of these communities, they do depend on that food traffic, that foot traffic, that those office workers. And so I think we're all optimistic that it's that's sooner rather than later.
Yeah, it's really New York is such a vibrant place. I grew up in Washington D.C., also a downtown that has had a real renaissance, and I can imagine, and it's really all does boil down to personal preference. Do you feel comfortable going to a crowded restaurant, hanging out after work at a bar with your friends as you might have before? Let's talk a little bit about if you were going to advise a small business person who is sitting there trying to decide, should I hang in there or should I fold them? What are the kinds of things, Margaret, that you would advise them to look at in their numbers in themselves, in their community, in their marketplace to help them make that decision?
Yeah, no, it's a great question. I know this was something that that Orvin really wanted to touch on. You know, I would say a few things. I think one, you know, numbers, or at least I believe, like, numbers don't lie, right? So even in the earlier part of the conversation, we were talking about capital and loans, right? PPP was unique, right? Because it did have that partial forgivable component. But, you know, if you're looking at a set of expenses and a revenue model where it just doesn't seem like without significant grant support or continued, you know, or the world to kind of snap back to exactly where it was immediately, if that's what kind of solvency requires, then I think it is important to be really honest with, you know, yourself and your employees and your, you know, your vendors and your landlord. You know, one of my favorite colleagues at the firm always says, you know, bad news doesn't age well. And I guess the other thing I'd say about that is we have many incredible business owners who are part of our 10,000 Small Business Scholar program where, you know, they're not on their first business. They may be on their second business or their third business, and you take so much of what, you know, you've learned and, you know, services you've provided and problems you've solved, and you're able to take them to, you know, quite frankly, maybe the next challenge in the next business. So I think it's important to not just think about what might be lost in this moment if a business closes, but new doors that are opened. And we're actually seeing, you know, these aren't business closures, but we're also seeing so many businesses around the country truly pivot. You know, I'll tell you about a business owner, one of our favorites, Brooke Miller. She operates in Detroit. Her business is called the Pure Honey Group, and she's a co-working space and community space. You know, they serve, you know, hundreds of mothers, and right, she's had to be physically closed during this time. But she's really innovated and thought about, well, how can I continue to provide those services? She's doing yoga online, you know, meditation online, and she's hosting virtual birthday parties, right? No one would have thought about a virtual birthday party 6 months ago, you know, but she's been able to pivot and find new revenue streams. And so, you know, I'm sure is there some disappointment about not, you know, being able to physically be in the space? Sure, but it's also the opportunity for creativity and, you know, to try new things and, you know, earn revenue in different ways.
Well, I'm happy to say that Orvin Kimbrough, Chairman and CEO of Midwest BankCentre in St. Louis, is with us now. We're sorry, we apologize for the technical issues that kept you from joining this conversation earlier, but we'll spend a few minutes now. I asked Margaret there, as you advise businesses, and I know you as a smaller lender in your market. I mean, you're not small, but compared with some of the national banks, you're not of their scale. But that gives you an intimacy with customers, with business people that those bigger banks may not have. And my question to Margaret was, what are the things you look at with a small business owner these days to tell you and him or her that it might be time to move on? That you're going to be throwing good money after bad. What do you look at, and how does that conversation go?
Yeah, first, the technical difficulties here. All small businesses have to be agile, as we've had to be agile here with the technical difficulties. Midwest BankCentre, as you pointed out, is the second largest privately held bank in St. Louis. We are small in comparison to the really big boys and girls. We're about $2 billion in assets, but when you look at our customer base, we tend to trend toward the smaller businesses. Many have bootstrapped themselves, and others have just grown over time. We really encourage our customers to understand what's in their control and what's not in their control. The first part of this equation, Tyler, Margaret, always comes back to mental disposition. If you believe that there is an opportunity for your small business to rebound on the other side of this health crisis, then you can stick in there and do everything that you possibly can. At Midwest BankCentre, we typically look at your debt service coverage ratio. So we take into account your net operating income and your debt during a given year. At 1, that means that you are able to take on debt and service that debt, but you're not making any profit. We typically look at about 1.2, which means you're making about 20% profit. You're able to reinvest back into the business. this is a very, very tough time for all businesses. In addition to mental disposition, it is so important that you go back to business fundamentals. This isn't rocket science, folks. You want to understand your balance sheet, as Margaret said. You want to understand your cash flow. You want to understand your ability to absorb some short-term shocks. Just 15 minutes ago, the city of St. Louis, which is one of the largest counties in our region, announced that they were rolling back provisions. They were calling for bars and restaurants to go to 50% capacity and to close by 11 o'clock. You absolutely have to pivot your business model if you're going to be successful. Every business right now has a revenue challenge. Their objective is to get more revenue, and as Margaret said, you look at this as an opportunity. You can operate in fear with a fear mindset, or you can operate with a faith mindset and be opportunistic about the opportunities that are out there.
Orvin, I'm going to ask you one more quick question before we must wrap, and that is, let's set aside government programs for now for capital. Where should a small business owner go first and second to get capital now if they need it? Quickly, please.
So the first place that you go, if you absolutely believe that you don't have a solvency issue with your business, is you might consider self-funding. You might dip into your 401k. You might dip into the equity in your mortgage. Again, that depends on if you're absolutely certain that the business can rebound. You got whole life insurance. You can borrow against a cash value. In addition, government programs, not just the federal government programs, all states have funds that you can access. States have them, local municipalities have them. You can also do crowdfunding types of things. The final point, Tyler, that I think is important, you can pay yourself by renegotiating your contracts. So cost management is a huge part of this equation. So to the extent that you have rents that are fixed costs, tie them to your profits, tie them to your revenue, and you'll see yourself with a bit of a windfall to give you some cushion. And finally, the final point is your banker is your best friend. Community banks are your best friend, and the best time to ask for debt is when you don't need it. So if you've examined your balance sheet and your cash flow and you're sitting in a pretty good position, but you anticipate challenges in the future, reach out to your community bank and get a line of credit right now. You want to get that line of credit before you absolutely need it.
Yeah, borrow when you don't need the money is often the saying. Orvin Kimbrough, thank you so very much for your indulgence today. We're sorry we didn't have you involved earlier in the conversation, but you really brought it home very beautifully. Margaret Anadu, thank you very much, and continued good luck with all that both of you do as we push through coronavirus and COVID-19.